How do business loans work? In this video, I'm going to share everything that you need to know on how do business loans work, but more importantly, how do you actually go and get a business loan, and what are the things that underwriters are looking for? Stay tuned. So my team and I have helped secure over $1 billion in business financing since 2007 at my company, National Business Capital. We have a really cool platform. And I think at this point, I know a thing or two on how business loans work, but more importantly, what you're going to need in order to get a business loan. So a few things that you really want to consider when you're looking to get a business loan, and really more importantly, like what lenders are looking for. There's a lot of different lenders. There's banks, there's non-bank lenders, there's fintech. So depending on what you're looking to get accomplished, every lender will be a little bit different guideline-wise, but I'm just going to give you a quick overview. So typically, it's very hard to get money when you're looking to start a business. Like if you don't own a business, if you're looking to just start a business, it can be a little bit challenging. Really, the best way to go in that situation is an SBA loan to put down 10%. You'll have to be buying a profitable business, and you will need to have some sort of an understanding or some sort of history or qualifications and why it would make sense for you to be buying a business if you don't own one currently. But if you own a business, lenders really want to see that you're in business for most banks for 2 years. Non-bank lenders will consider 1 year and sometimes less. So anytime you're less than 2 years, and more importantly, less than 1 year in business, it's really going to come down to two major things. Your credit history, but more importantly, your business revenue and cash flow. So if you are, under 1 year time in business, we've helped owners get qualified for $100,000. We've helped owners get qualified for over $1 million on a credit line. But the most important thing was they had a decent credit history, but they had revenue and cash flows. So if you're doing revenues, you can tap into those revenues and unlock and leverage them in order to use them for a business loan. So, lenders want to see a very, very minimum, at least $10,000 a month if you're under 1 year time in business, and sometimes at least $20,000 or $25,000 in monthly gross sales. This is just gross monthly revenues. Obviously, the more of those that you do, the better it is. It opens up to more and more different types of lenders that will work with you. So let's talk about what people are using business loans for. So business loans and what lenders really want to see you for are really any type of improvements to the business. Lenders and underwriters want to understand that you're looking to grow the company, look to improve not only cash flow, but also your profitability. Some of the things include staffing, so hiring new people that can drive sales, inventory so you can sell more products and goods, equipment so you can do more and take on more jobs, advertising, marketing in order to obviously drive in more revenue and sales, and then any other type of expansion, in your business. So making your space bigger so you can accommodate more, buying more trucks and equipment so you can expand and do more. So any type of things that are, really growth related are what lenders really like to hear and want to see and want to understand. Now you can't just say that you're looking to do these things. Lenders will sometimes ask you for backup to whatever your story is. So make sure you're prepared to provide that backup. It's really important. And the more things that you can prepare and the more things you can provide to a lender or an underwriter, the more comfortable you'll make them feel, which will just make it easier for you to get approved and get what you're looking for. So let's talk about terms and lengths of terms and how things are repaid. So pretty typically, if you are looking to work with a bank or an SBA lender, they'll do a working capital 10-year 7(a) product, which is a 10-year term, very low rates, prime plus usually 2 or 3%. So whatever the prime rate is, you just add 2 or 3% to that, and that will be your actual rate. There's a lot of requirements that go along with SBA loans. It'll take you some time to get one, probably about 2 to 3 months, and that's working in a quick fashion. So basically, if you are not going to go the SBA route, then you're going to go a true bank lending route or a non-bank lending route. So if those terms will be anywhere from 1 year to 5 year repayment terms. So basically, you'll get approved. There'll be a set repayment term, a set interest rate, and then a set repayment schedule. Some lenders today will collect it on a monthly basis. Some will collect it on a bi-weekly basis. And and some will collect it on a weekly basis. There's nothing wrong with any of those. To be quite honest, a weekly and bi-weekly repayment schedule is really good because it helps you with cash flow and helps you plan. But just depending on the lender and the approval, they'll be structured in one of those options. Let's talk about collateral. What's really amazing is there's so many lenders available today that you can get financing with or without collateral. There's a lot of lenders that will lend to you without collateral. And collateral can be a few things. It could be a piece of real estate. It could be a large piece of equipment that's free and clear. Or it could be your receivables. So there's many forms of collateral. It just doesn't have to be real estate. But if you don't have high quality receivables, equipment, or real estate, that's okay. There's multiple options available for you today where you don't need a hard asset piece of collateral. Basically, those products will be based on purely your cash flow and what you're looking to use the money for. But what's really great is you don't need collateral today, and you can get terms all the way up to 5 years and even 10 years without hard asset collateral, which is really, really great. That's a big change from years ago. Back in the day, the old school way of lending was a bank would lend to you only if you had collateral. Now there's many non-bank lending options where you don't need any forms of collateral. And then a few bonus tips that you might want to know and understand. So when you're borrowing money, the questions that you want to ask when you're taking out your business loan, well, what is that term? How long do I have to repay this? What is the payment schedule and structure? Is it weekly, bi-weekly, or monthly? Are there any penalties if I pay up early? Or are there any discounts if I pay up early? And then on top of that, what are the origination fees in getting this loan? Usually banks will charge fees. And then are there any other fees associated with your loan transaction? So whether you're working with a broker or directly with a lender, you really want to understand those options. What's really important if you're ready to apply for a business loan are the things that you're going to need. So today, it's usually a simple application. Every bank and lender is different with this. Usually you'll have to provide at least 3 to 6 months of your business banking statements. If your loan amount is over $150,000 to $250,000, most lenders will want your recent financials. So that's a profit, loss, and balance sheet. And they'll need usually the last year's, sometimes the last 2 or 3 years of financials, and then more importantly, your year-to-date financial report. So those are really important if you're going for larger amounts of dollars, and you want to have all that stuff ready and together. It's super important to have that stuff prepared, so when you can apply, you can give it everything over in one shot and get an answer much quickly that way. So make sure you have your financials in order, make sure you're doing your up-to-date bookkeeping, and make sure you're keeping everything all together, getting those reports, whether it's from your bookkeeper or accountant on a monthly basis, and keeping those things all together. I see so many people that say, oh, I have to get that stuff from my accountant. They've got an opportunity or a challenge in their business. They go to apply, their accountant's away on vacation, and they can't get access to that stuff, and it creates major issues. So make sure you keep all that stuff together and prepared. What's really important if you want to put yourself in the best position to get the right business loan, because there's so many options out there, and you can shop around from lender to lender. It'll take you like months and maybe even years to find the right lender. It's really important that you're working with someone that can provide and bring multiple lending options to the table. Because there's different types of business loans that are available. There's lines of credit, there's equipment financing, there's SBA loans, there's term loans, there's all these different products today. And if you're only working with one lender, usually lenders only have one product. Even if they have more than one product, like let's just say a business loan and equipment financing, or a business loan and a line of credit, that's great. But if you don't get to the right lender, that you most likely will not get the largest amount approved, the longest length of term to repay, or the lowest cost of capital. So getting yourself to the right lender is probably one of the most important things. And I'm going to plug my company here, National Business Capital, because that's exactly why I created National Business Capital back in 2007, was to help owners access capital, but more importantly, the right capital, and more importantly, quick, fast, simple, and easy. We have over 75 lenders in one place. You speak with my team and you get matched with the right lender. So whether you decide to use me or anybody else, that's okay, but you want to make sure that someone can bring multiple lenders and options to the table. Because depending on yourself, your industry, your time in business, your credit profile, the amount of sales you're doing, and then what it is that you're looking for and how much money you're looking for, All those things are different factors and will make up all different types of approvals depending on the lender that you're with. So that's really, really super important. The last thing that I'm going to leave you with, and is probably one of the best things I can say, regardless of who it's going to be that you're going to work with, please make sure that you check reviews and look into that company before you send out your personal and financial information. It's really important. There's a lot of scams out there. If anything seems too good to be true today, it probably is. If anyone's asking you for upfront money, beware. I'd hate to see you get taken advantage of, lose your money, and more importantly, not get the right deal for your business. And you can check out my other video on things to beware for and watch out for when applying for financing. We'll drop that video somewhere here so you can find there down in the comments. We'll send that link so you can check out that other video so you know what to look out for. A lot of crazy things out there. I hope you found this video helpful, and I hope it gave you a better understanding of how business loans work. Please make sure that you subscribe, comment below, and share my content with another business owner or someone you may know that can find this helpful and useful. Thanks for tuning in to Grow by Joe. We'll talk soon. I wish you nothing but success and keep growing.